Gear is often associated with more sophisticated investors looking to build their wealth. But what does this all mean for the rest of us? Welcome to The Pitch. I'm Sarah Allen, and today I'm talking to Cameron Gleeson from Betashares about how you can use geared to ETFs to build your wealth and the new Betashares Wealth Builder funds. Cameron, welcome.
Hi Sarah, thanks for having me.
So to begin with, what was the rationale for launching the two new Wealth Builder funds?
Yeah, the original idea actually came from a Betashares investor. An investor who was using our GHHF fund, which is a diversified all growth fund, and he asked whether or not we could create a moderately geared version of that fund because he wanted to use it to build long-term wealth. So that's the original genesis, and we as a team took that and we looked at that. We looked at what sort of conditions would suit this sort of fund and how it would behave in different parts of the market cycle, and frankly we were convinced. We saw this as a really good solution. So we've launched two funds within the Wealth Builder range, the first two funds, which are GHHF, providing diversified exposure to around about 4,000 Australian and global listed securities, and then G200, which provides exposure to the 200 largest ASX-listed companies.
So that's a geared version of your A200 product?
Exactly right. So these are both based on very popular existing products that have wide support. So we do think that we're going to see a lot of self-directed investors target these funds and look to add them to their portfolio, as well as advisors who see these as relevant solutions for certain clients that they manage.
How can investors incorporate geared strategies into their portfolios?
Yeah, so there's a range of different ways that you can use a geared solution. Of course, this depends on your risk tolerance and having a view that over the long term, that markets will generally appreciate. But examples include, for example, a young investor who perhaps doesn't have a great deal of capital behind them, using a dollar cost average approach to use the market's compounding power to grow their wealth over the long term. An SMSF solution for increasing the amount of exposure you can get out of your capped super contributions, or indeed increasing your access to franking credits within a SMSF. And then you also get investors that might want to be a bit more efficient with the amount of capital they allocate to their investments, perhaps use or release capital to pay down non-deductible debt. So there's a whole range of different ways that investors can use these funds.
They're often referred to as complex ETFs. What is this?
Yeah, that's right. So ASIC has released some new rules around the naming of ETFs, and that's to help investors understand what they're buying. So from April of this year, all new ETFs launched that have some form of leveraged exposure or derivatives to gain exposure must include the word complex in the name. Now there are existing funds that have a 12-month grace period. For example, GEAR, which is our geared Australian equity fund, those existing funds are also going to have to migrate across and change their name to have complex.
How is GHHF and G200 different from other geared ETFs like GEAR?
Yeah, so GEAR and GHUS, which are our two original gear products, we launched them about 10 years ago. So those funds were designed to provide really low cost, leveraged exposure to US equities and Australian equities. But what they do provide is a relatively strong degree or high degree of leverage. So the exposure that you're going to get with those funds is roughly 2 to nearly 3 times exposure to the underlying portfolios which they hold. Now, in contrast, the Wealth Builder funds are much more moderately geared, and they provide, so G200 and GHHF provide around about 1.5 times leverage. The lower level of leverage, we think that does allow someone to accelerate their wealth, but doesn't push the volatility beyond the level that a lot of investors are seeking to sort of remain under. So, certainly lots of people are big supporters of GEAR and GHUS, but there are others that are going to want something with a slightly lower level of volatility, and we think this is a great solution for those people.
Thank you so much for sharing your insights today, Cameron.
You're welcome, Sarah.
If you've enjoyed this interview, please subscribe to Livewire Markets. Thank you for watching.